Amitabh Chaudhry, from your perspective, what more would you like to see from the government to try and be able to control inflation, especially on food inflation, where a lot of it is dependent on factors beyond mankind's control, including the monsoon?
I don't think government can, in the short term really do anything about controlling food inflation. As Sanjiv said, that if the monsoon is not good, we are seeing, you mentioned about wheat production coming down, then government has to intervene as it is trying to intervene. I think the other job has to be done by the Reserve Bank of India, which is already doing that. They have to raise interest rates to bring the demand down, the liquidity down, so that the...
Estimate, how far should interest rates rise given the current macroeconomic conditions in India and globally, and the compulsions on account of what the US Fed and other central banks are doing?
So I would say that the first step is to actually get it to the pre-COVID levels, which is 75 to 100 basis points increase over the next couple of months. After that, the data will speak for itself, and then RBI will react to that data. My view is that the problem is, because of the external factors, is not going to be that easy to tackle, because everything, as you said, is not in our hands. But the government is being proactive, RBI is being proactive. I'm told Governor today itself talked about how there will be increase in rates. So he's signaling to the market that we are going to go after inflation. We will try to control it and ensure that we get it under control as quickly as possible. The factor which is not in government's control is the externalities we talk about.
But as the US Federal Reserve also increases interest rates, a lot of foreign portfolio investment is going back to the US, and therefore potentially making the India story less lucrative than it was at a time of low interest rates.
And that has always happened. So the dollar is strengthening against every currency because of the fact that the Fed has announced proactive, aggressive rate hikes. They're also withdrawing liquidity. But I think it's a temporary phenomenon. The moment they get under control in the next 12, 14 months, they will stabilize, and the money again has to go searching for the right returns. And as you talk about that, India does offer itself as a destination of where you can make the right returns, safe returns, over a long period of time.
How real, in your view, is the concern of the United States slipping into a technical recession over the next few months?
The commentary has definitely shifted to lower growth and potentially a recession. I think there are very few, if I have to stand out, I will talk about a recession, but otherwise the commentary is definitely talking about lower growth. I think the Fed is quite confident they can manage with lower growth. The stock markets are already reacting, the interest rates are already reacting. Hopefully they'll be able to manage it. But yes, if there is a recession, there are enough tools available in the hand of Fed to raise rates further and get under control or infuse liquidity if necessary. So I think the tools are all available. They have been tested in the past. So why should we assume that recession will happen?
One of the critical questions facing the world at this moment is whether it is inevitable that the globe will be divided into two trading blocs: the United States, Europe and allies on the one side, China, Russia and Sino allies on the other. I want to get a sense from this panel here at the World Economic Forum on how they see global trade tensions and India's role. Ideally, we'd like to keep China on side because of what's happening along the line of actual control. That may not be in our control. Sanjiv Bajaj, I'll start with you. How are you viewing these growing trade tensions and the fear that the world, far from going towards greater globalization, could be split into camps where you trade with your allies in regional trade treaties?
The reality, Rahul, in the last 5-7 years is we have seen pressures to a globalized common world. Ever since the Second World War, we've seen the benefits of that. As you're saying, possible two trade groups may come about. This is really driven by as much by people and domestic politics as it is by global geopolitics as well. And that's why it's very difficult to try and forecast where it will head. What we should do as a country is to know that if this happens, what's the best position we can put ourselves to gain the maximum out of it. Because the more this happens...
How should we gain from the geopolitical dynamics as they play themselves out?
Very clearly the larger bloc, which is the Western bloc and even the Southeast Asian bloc, will look for opportunities from countries like India to create that manufacturing base, to create that alternative to China. It's going to take a while to do it, but they will be looking at us, and each step we take in the right direction will take us closer towards being that strong partner to them for, as Amitabh said earlier, not for 5 years, for the next 3 decades. That's our window of opportunity, and really it's only for us to lose it.
A lot of people here in Europe, and as you speak to American commentators, want to push India to take a side, a binary, that be with us, you're not enough with us. How do you see these growing trade tensions play out from here, and what do you think India can do to capitalize? Because a lot of people in the United States think if you want to benefit from a strategic association with the United States, we need to know you're on our side, and right now we're not sure. It's complicated here.
So Rahul, let me step back a little and let me first say that both fiscal and monetary policy have their limitations. They can take you till a point, not beyond that. Important thing for India is to continue to sustain its reform process unabatedly. Keep on reforming, keep on bringing in private sector play, like we are doing with asset monetization, where we overcrossed our target. The second thing, important thing to understand is that the world grew when there was no challenge of climate change, and the multilateral trading order was growing and expanding. Both of these are actually not challenges, but they are massive opportunities for India. Both the weakening of the multilateral trading order, and India needs to step up its game. It's done that, but even more step up its game on bilateral trade. And secondly, climate change gives you an opportunity to technologically leapfrog in many of these areas and look at technologies where the world will be in the next 4 to 5 years and leapfrog there. And to my mind, going digital and going green, the government has done it in a very big way. It's for the private sector, and both of us together to work in partnership to really drive accelerated digitization and accelerated green growth for India.
Are you disappointed with the way the LIC IPO opened, and on account of uncertainty over fuel prices, even the disinvestment of BPCL seems to have hit a big roadblock, and now we're seeing a lot of private petroleum companies saying, you know, given how the government increases prices, reduces prices, there is no certainty, no private sector player would want to be in this space.
Rahul, I'm never disappointed. I only look at the positive sides.
The poor investors who put their hard-earned money in the LIC IPO.
That's exactly what I'm saying, that you'll have to wait for better days. All these days turn around after some time. And that's what I'm saying. Each one of them who are investing now will at some point of time make money. The stock market works in that manner. It comes down one day, but don't assess the potential of a country based on the stock market.